Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. Today morning I told you there is nothing to talk about US market, Asia market and other market. So it is all about election results. Nifty opened in line with GIFT Nifty indication, but what happened after that is just unimaginable. And Bank Nifty, even after opening higher, it continuously moved, and in fact Bank Nifty moved more than 1000 points after the opening level. And the people who are worried about gap up, gap down, but after opening gap up also continuously moved, and Nifty also moved. And finally Nifty ended about nearly 150 to 200 points higher than what GIFT Nifty was trading in the morning. So my prediction in the morning has gone terribly wrong. So I expected some kind of selling at the higher level. Why? The reason is very simple. So what is the primary job of the domestic institutions? So to reduce the panic when the markets are in panic, and to reduce the excessive speculation when the markets are moving higher. So when the markets fall drastically, they should come and support. When the markets are moving, out of the way, and so as and when the market falls, the pain will be too severe for people to take. So to control this excessive speculation, the domestic institution is supposed to sell. So this is the although there is no written rule, but this is how the domestic institutions behave. So I thought because of this excessive speculation, the domestic institution will definitely come and book some profits. At least on intraday, there will be some fall. So I expected Nifty to close around 20,500. But what has happened? Domestic institutions, instead of selling, I think they changed their F1, F2 button in the computer. So instead of selling, so they kept on buying. So today they have bought 5,000 crore. I really don't know. When the market is crashing, the value is very, very high. That is when the domestic institution should pump in millions of dollars. But now when the market is at all-time high, the Bank Nifty is also at all-time high, and now they are coming and pumping 5,000 crore is unimaginable. And FIIs, that was expected. FIIs will always sell when they will always buy when the market is at all-time high, and they will always sell when the market is at all-time low. So they have also bought for 2,000 crore. So taking the total institutional buying to 7,000 crores today. On a day like this, if 7,000 crore is being pumped in by institutions, how the markets can fall? So it was a terrible, terrible rally for the people. So I already cautioned you about 1 week before, if you are a non-directional trader, better, close your positions on Friday and consider retaking the positions on Monday. Otherwise, you would have lost heavily on the call side, but corresponding profit on the put side is not much. Okay. So also I've been advocating the trend following. I told you since 19,530 was taken out by Nifty, market is long. Some people, they just to troll me, they come and say, no, now Mr. Sundar has become long. No, we short the market. Okay. So just imagine what would have happened to the people who have shorted the market around 19,500. Okay. Now it is closer to 20,700, a 1,200 point rally. So which is, shorted one lot of future, these people would have lost 60,000 rupees. To short the Nifty future, margin itself is about 1.2 lakh, 60,000 loss, 50% of capital is wiped out. So a small mistake, the punishment will be very, very high. And I tell you one more interesting thing. Most of the time my workshop participants or my friends, whenever they talk to me, they are always worried about the black swan event on the downside. But black swan event can be on the higher side also. So, if you look very carefully, people have lost heavily on Nirmala Sitharaman candle day. And today they must have lost heavily. Right? So just to give an analogy, I used to tell the people, I think I've given in YouTube also, I forgot. Okay, if you do not know how to do swimming, if you fall in the drainage tank, you are going to die because you don't know the swimming. It does not mean that you fall in the honey tank, you are going to survive. Okay, still you are going to die because you do not know the swimming. So, the market is all about risk. If you know how to manage the risk, you can play with puts also, you can play with calls also. But if you don't know how to manage the risk, it doesn't mean that the black swan event will come only on the downside. Okay, so you only sell call option, you will be safe. And now the people have lost heavily, those who have sold call option only, not the people who sold put options. Okay, so what matters is that whether you know swimming or not. It does not matter whether the tank is a drainage tank or honey tank. Okay, so having said all these things, now a word of caution. Number one, the put call ratio stands at 1.54. Usually any put call ratio above 1.5 is very, very dangerous. Okay, the people are complacent, the bulls are complacent, they close their eyes and they are selling put options. And also RSI so is indicating a overbought levels. But however, overbought markets can continue to be overbought, oversold markets can continue to be oversold until you go bankrupt. Okay, so it can be there, but at the same time, it is the time you have to be a little bit cautionary on the higher side. Okay, so at best, markets can consolidate or market can retrace a little bit also. So what happens normally, people sell one call option and one put option. When the markets shoots up like this, there will be a huge loss in the call option. To cover that huge loss, they sell 3 put option, 4 put option. So that is how the put call ratio goes to 1.5 and above. Then if there is a sudden negative news, sudden fall for one or the other reason, okay, there will be one profit on the call side, the 3 or 4 losses on the put side, you will still be in problem. Okay, so overall thing is that, so everything is bullish, but the question is, the news came on Sunday and market shot up and that has already been factored in. So what next? Yes, the first thing, let me tell you, for any country to have a sustainable bull market, so what is the most important criteria? So the most important criteria is the political stability. Okay, so when one party is commanding a good respect, when one party is likely to form a stable government, okay, so that first criteria is met. Okay, so that is why the people are pumping in the money. Okay, but I leave it to you the remaining things, right? So that is not the only criteria for a sustained bull market. So there are a number of other factors are also there. Okay, so we need to analyze all those factors. Again, there is no rush to buy. Okay, so BJP may form a government, BJP may form a stable government, but it does not mean that the Nifty will continue to rally from here without giving any chance. Here and there, you will always be getting some chance, always some fall will come, some chance will come, at least intraday dip will come, So the most important lesson you have to learn is that don't chase the markets. You chase the market, so that is where the problem will come. Okay, so I think I am giving too much advice to you. So my policy, never ask for advice and never give advice. Okay, so let us see tomorrow morning. So what is going to happen with European markets slightly down, US futures are slightly down, but here both FIIs and DIIs are buyers. Okay, so we see the other factors tomorrow morning. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.